Thanks very much, Tim. Always good to be here, and great timing as for those of you who don't know, we had our AGM yesterday, and Mark Samlal, our director, hosted that along with two of our new colleagues through our acquisition. So if anyone's interested, please go to our website and watch that as a replay. So I'm here to tell you who PayGroup is, what we do, where we do it, how we do it, and what underpins our growth. And very exciting news at the end, which I'd like to share, which was also shared with the investor market yesterday. We are, at our core, a mission-critical payroll solution provider. We calculate payrolls for the corporate market, for the contingent labor market, so the contractors, and most recently, the franchise market. And because we do it for multiple verticals, we are the only one in the world that can cater for all those different employee groups. But we don't just do payroll, even though that's our core. We overlay that with a lot of our human capital management solutions, and we'll come to that shortly and what that really means practically for organizations. What underpins us is the number of pay slips that we deliver on behalf of our customers every week, fortnight, month, annual. Every payslip we deliver is a revenue generating event. So we are a fully compliant payroll solution, and we are now doing annualized 6.7 million payslips for all our customers. We do have that human capital management suite, and what that allows is we hit the core of payroll, and then we upsell and cross-sell our other modules to make sure that our customers' needs are satisfied. And every time we upsell and cross-sell a module, we generate further revenue. We do all of this across 41 countries today. Majority of those are in Asia Pacific, and we have got the rest of the world or emerging economies like the Middle East, and we are also making small headway into Europe and also North America, as we assist our clients to grow there. And that's how we underpin our growth. We help our customers grow, and we grow with them. Our total customer base today is 2,200, continues to grow. And the last reporting we did at the year-end announcement at the end of May was 2,100. So the fast nature of our growth is we bring on customers every month, every quarter, and we report those numbers on a quarterly basis in our business update. And we are also very well recognized by the leading bodies, which procurement always likes to see. So we are recognized by Gartner, we are in their multi-country guide, and what that advantage has played for us is it puts us on the table for global deals, because we do pass the procurement test of being listed, having a very strong balance sheet, having a great geographical presence, and having all those suite of services to offer our customers. Next slide, please. So we are very trusted because payroll is very sticky. And I mentioned earlier, our growth, our revenue is underpinned by every payslip we deliver, and every payslip we deliver is a revenue generating event. And over the last 4 years, we've had a 17 multiple growth in our payslips. And that's very, very pleasing, not just for us, but for our investors, because that underpins our repetitive recurring revenue. And the importance of that is we sign minimum 3-year contracts with our customers, and they're automatically renewed. We have a 99% customer retention rate. Basically, what it means is we have customers for life. And as we grow our payslips, we grow our customers, the trajectory keeps going that way. We do not lose customers, and the growth is added and compounded on top of previous growth. And we very much deeply integrate with all of our customers. It's not just a manual solution. We have our platforms. We deeply integrate with all their ERP systems. We might even integrate with their version of their system of record, like a Workday. So we connect so deeply that it is a much stickier solution. And with that connectivity, we not only deliver things very efficiently from our end, but because the integrations are there, we can actually deliver data feed back to their platforms very efficiently, reducing the client's cost even further. Next slide, please. So payroll is our core. And as I mentioned, we do it for our multinational corporates. We do it for our workforce management, which are the contractors. And now we also do it for franchise. And we're the only one in the world who has all three verticals. And then on the right-hand side of the screen you're seeing here is all our human capital management modules. Let's pick a few here. Look at facial recognition. Recently with COVID, people want to walk into their workplaces feeling safe. We have our modules which allow not just facial recognition, but temperature check to allow you in the door. If you have a high temperature, it will ask you to apply for leave, which then sends you to the doctor to get a COVID test or whatever way you want to work it. We also have learning and development. We have timesheeting, which is quite important for our workforce management solution. And of course, at the core of it, we have onboarding, how it all comes into our main platform, where we have the data of every customer and every employee. Next slide, please. So we are the leader in the Asia Pacific region, and we are in 41 countries, and we have a leading position in those countries. We're leading position because we've demonstrated year upon year of 100% compliance. And compliance is the biggest fear people have in payroll today. Am I getting underpayment problems or even overpayment problems? Have I validated all the data for my employees, including their, for example, superannuation fund, tax file number, their visa status if they are a foreign worker? And we continue to grow our countries, as you've seen over the last 3 years, and majority of that growth is driven by where our clients are wanting us to be, or where we see big opportunities with a rapidly expanding client base, as we recently saw in Japan. We've had a partnership relationship in Japan for some time, but we've now turned that into our own Japan flag, where we've acquired that partner. And the reason we did that was, with the last 18 months, a lot of industries have suffered. However, with the payroll being such a core function of businesses and certain geographies reacting differently to the environment that we faced in the last couple of years, Japan has been seeing massive investment, not just from our customer base, but from a lot of companies who are shifting to go to those markets. And because we have the powerful payroll data that we carry through our platforms, we can see the trends in certain countries. And we saw that trend of investment into Japan. And as management and board, we made a decision to actually get there on our own and turn that partnership into an acquisition. And those 41 countries will continue to grow, and we'll keep updating on that stat every quarterly when we release our business update. Next slide, please. Just touching a little bit on our customer base, we are industry agnostic. All our 2,200 plus customers are in multiple sectors. And some of the names you see on screen there are household brand names. We deal at the multi-country MNC level. We don't deal at the corner shop level, and we let gravity work for us. We'll sign regional headquarter, or we'll sign with Michael Page or Hudson, who have multiple customers and they drive the contractor growth. Or we'll sign with a franchise master, like a Laser Clinics, who has 155 stores to fulfill, where we just go store by store because we've signed at that top level. So we sign here and let gravity work for us, which then leads to a very quick upsell, cross-sell across the whole base. Just some recent wins. We brought on some fantastic brand names. Hudson RPO, NASDAQ listed company. We're doing their contractor management in Asia. Laser Clinics, a fantastic example. The company we recently acquired had Laser Clinics Australia and New Zealand only, but because they came into the PayGroup family, and PayGroup has 41 country presence, we were able to take Laser Clinics into 3 other geographies just as a result of that marriage. So really great upsell, cross-sell opportunities. We've signed Weatherford for more countries across Middle East and Africa. Foresights Recruitment in Australia, and a great brand name, Yarra Australia. So we continue to grow the household name customers, and these all add to our revenue and our pay slips. Once again, just reminding everybody, 3-year minimum contracts, which are automatically renewed, and a 99% customer retention makes all these clients basically clients for life. Next slide, please. Just a quick overview on how we've performed in quarter one. We are a March year-end company, so June 30 was our end of first quarter. I've already explained the pay slips that we do, but just to give you a metric, that's 12% growth from FY21. So we've increased 12% pay slips just from April to June. Every pay slip is revenue generating. We have maintained an average current gross margin of 50%, and the core focus of our management is to actually look at areas to improve that. And that comes through cross-sells and upsells, because that's just extra revenue at lower cost, lower incremental cost of delivery. Plus, we also do monetization activities, which help to give financial well-being products to our customers' employees, which drive more revenue at low cost. Our global partner program has also contributed well. And those of you who know us very well, the GPP for us is all about having those multinationals outside of Australia and Asia Pacific signing those big deals like a CloudPay, like an Ultimate, and giving us the work to deliver. So that and our direct sales channel really fast track our growth. And again, 99% customer retention. Next slide, please. So here's the great news for everybody. We've never given guidance to the market so early in our financial year, and we released this guidance to the market yesterday and part of our AGM, so I'll repeat it here. We exited FY21, which is March year end, at 27.2 million ARR, and we already have given our guidance for exiting March next year at 35 to 37 million ARR. That's great growth sitting where we are today. And as soon as we sign more customers, as soon as we bring them on board, we can see the predictability and the visibility of our revenue. And that's been great CAGR, and that's how we expect our growth to be. The growth is underpinned by fantastic sales. 4.6 million of total contract value signed, and that's 53% increase on a prior comparative period. We continue to sell very, very strongly, and every client is a minimum 3-year term. Part of that 4.6 million is also the upsells and cross-sells, and that just means layering upon layering of revenue on an existing customer base. And we continue to invest in our sales force, which will further drive growth. So we're very pleased to make this announcement, and we'll continue to update the market every quarter on our pay slips and on our sales, which then gives a lot more insight to our shareholder base on our performance. Thanks very much, Tim.
Thanks, Sachin. A couple of questions. We've got time for a couple. Now, is the pace increasing of regulatory and tax change in each jurisdiction? And how do you manage the costs of making changes in the platform to reflect those changes? Can you increase prices accordingly?
Yeah, so payroll compliance has been changing every 6 months, every year across the world. And how we choose to deliver our service is either through our platform, which is SaaS-driven, or tech-enabled service. Where we have predominantly tech-enabled service, we choose best-of-breed licensed platforms to do the compliance calculations, Tim. And those platforms are certified by the local governing bodies for all the updates. Do we increase our price to customers? Absolutely, where it's justified. But the world knows that when payroll compliance changes, it generally changes on an annual basis when tax rates change or superannuation rates change. So it's all built in, but there's standard CPI increases that we adopt in.
And could you please elaborate on the plan to kind of expand gross margins?
In 2 ways, Tim. The first plan really is to make our platforms and our tech-enabled platforms more efficient. We're investing heavily through the hiring of our Chief Product Officer, Jerome Gouvenel, who used to run Innovation Lab at ADP. We're bringing more efficiency in how we deliver. That means you bring on more revenue without having to add always that incremental cost to only achieve 50% gross margin. The second aspect is where we bring on monetization through our sales process. not just by upselling and cross-selling, but by giving products and through our marketplace, like the superannuation fund choice that we have in Australia. Every time an onboarding contractor chooses or views the product that we have to offer through our marketplace, we make a commission revenue. And those revenues come at zero incremental cost. So that's two very high level ways that we're focused on improving our gross margin.
And you've been on the acquisition trail and you've been aggressively acquiring businesses. Now that you're kind of cash flow positive, would you look to access debt funding to kind of fund this growth moving forward?
Yeah, we speak this at the board quite regularly. What is the right balance of equity and debt? I won't say we're definitely going to go and get debt. We have $12.5 million at the end of our quarter in the bank, zero debt today, been doing very well. We get requests for acquisition every 2 weeks. We look at it. We are quite choosy. It's got to read the right metrics. And as you've seen, apart from one, majority of our acquisitions are actually done through share swaps and share script. So where it makes sense, we will look at debt equity strategies, Tim.